Hey friends, Tim here. If you're interested in real estate investing, especially multifamily properties, then this video is for you. We're going to be talking all about how you can earn while you learn through passive investing. So let's dive right into it. Ever had a question that kept you awake at night? We've all been there, especially if you're new to real estate syndications. Some of the terms and concepts can be confusing. And to me, it felt like the industry itself was intentionally trying to make things complicated just to keep regular people like me from understanding. Sure, you could hunt for answers on the internet or forums, but one of the best aspects of being a passive investor is the access to experienced sponsors. And guess what? As a passive investor who is entrusting your hard-earned money with a deal sponsor, you have every right to ask questions. Not only do you have that right, but if you care about your money, you absolutely should be asking questions. And trust me, I've asked my fair share of questions that seem simple in retrospect, but were crucial in helping shape my understanding of the business. So don't be afraid to ask the dumb questions. The first thing that struck me when I asked those rookie questions was the grace and patience the sponsor provided in answering them. So while we get into vetting a sponsor in other videos, if they make you feel stupid, that is your first big red flag. All right, if you're thinking, Tim, that's great, but I want to start doing my own deals. I want to skip over being a passive investor and jump straight to being the sponsor who raises money and puts deals together. I get it. It's easy to get hyped up and want to go straight into being an active investor. But hear me out. I still recommend you become a passive investor on at least one deal first. Why? Because you get the opportunity to understand the investor's perspective. If you aim to be a successful syndicator, remember this golden rule. Your investors are your customer, and investing someone else's money is a huge responsibility. Being a passive investor puts you in their shoes. You start thinking like an investor. You start understanding their fears, desires, and expectations. This experience is invaluable. It humbles you, teaches you empathy, and prepares you for your journey from passive to active investing. This concept is one of the reasons I became an officer in the Army. I had started as a private E1, the lowest rank, and felt that perspective would serve me well as a leader. And so that's why I went into ROTC and became an officer myself, because I could see myself in the position of those soldiers. And finally, the cherry on top, the opportunity to make money while you're learning the business. Isn't that the dream? Passive investing in multifamily syndication offers you just that. If you want to become a deal sponsor and you have the capital available, why not make money while gaining access to folks who are already doing what you want to be doing in the assets and markets you're interested in pursuing? You can pay for access through something like coaching, and there can be great value in that, but many people may not have the time to devote to truly reaping its value. Right? We're all busy with jobs, etc. So coaching may not be the right answer for the situation that we're in. And that's the situation that I found myself in. I was just too busy to take advantage of coaching opportunities. So instead of paying $20,000, $30,000 for a coach or a mentor to show me how to do this, it made more sense for me to just dive right in and invest my money and learn that way. Not only that, I was able to make money as well. Now, you could just pay for access to people like this through coaching or mentorship programs, but the issue there is that they may or may not work, right? Not all mentorship and coaching programs are created equal. That and some people just don't have the time required to devote to those types of programs. That's the situation I found myself in. So whether you're tied up with work, travel, or any other commitments, if you passively invest in a deal, your money is still working hard for you. And I think that's really the beauty of passive investing. So there you have it. The top 3 reasons why you should consider passive investing in real estate, even if you think you want to be an active investor later. Now, I know some of you are thinking, Tim, I don't have nearly enough money to invest passively. Remember, passive investing isn't only for the ultra wealthy. My first investment was about $25,000 in a 192 unit Class B value add deal. And the deal sponsor treated my investment just as importantly as any $100,000 investment. It is true that many of these deals have about a $50,000 minimum, but often there is some flexibility there, especially if they know that a successful small investment like that $25,000 could lead to a larger investment in the future or a repeat investment. They're much more inclined to go ahead and bend a little bit. And if you want a pro tip, wait until the end of the raise for the deal. And if they don't have all the money they need yet, that's when they're most likely to accept those smaller amounts. Passive investing in commercial real estate is a fantastic way to earn while you learn. And it's exactly what I did as I transitioned from being a passive investor into being what I am now, which is that active investor who's putting the deals together. If you're interested in becoming an educated investor or a successful syndicator, I highly recommend considering passive investing as a first step. And that's all for today. If you found this video helpful, make sure to like, subscribe, and hit that bell icon for more real estate investment and personal finance tips. Until next time, keep learning and earning.